Holy shit. Okay, they literally just approved the Fixed Income Clearing Corporation enhance capital requirements and make other changes filing. This was filed almost a year ago on December 13th, 2021, and it caused an uproar in the small, medium player part of the industry. I mean, holy shit, this got approved, and we're going to go through this just briefly for a second because I have to see. I know it's Friday, but I have to see what is in this as far as if they changed anything from before. Because they had the requirements going from, I think it was pretty substantial. Let's see. Okay, so for GSD Bank netting members, FICC proposes, which FICC is the Fixed Income Clearing Corporation. They're in charge of, overseeing fixed income, the GSF or GCF repo facility, things like that. Let's go ahead and read this real quick. They're proposing to change the measure of capital requirements for banks and trust companies from equity capital to common equity tier 1, or what's referred to as set 1 capital. Also, they're going to raise the minimum capital requirements for banks and trust companies from 100 million to 500 million, 4 times the amount that it was previously. And they're going to 3, require U.S. banks and trust companies to be well capitalized. They're preparing for what's to come after the historic dead cat bounce into a recession that's going to be happening later this year or into early January. The proposal would align FICC's capital requirements with banking regulators' changes to regulatory capital requirements over the past several years. And what they're referring to here is the net stable funding ratio, which was implemented, or not implemented, but filed on July 4th of last year. And it involves things like the ASF ratio, the RSF ratio, net stable funding. And then you have the secured financing service, and you have the net stable funding ratio. All LIBOR SOFR related, big changes in Title 12 of the Code of Federal Regulations. Now again, it would align their requirements with these changes to the NSFR that came out. Now, if you haven't looked into that, I have several videos on the topic. If you're in the group, you can just type /FUDSTOP and then select videos, and then you can find explanations on it there as well. Now, consistent with these changes by banking regulators, FICC states that it believes that the appropriate capital measure for members that are banks and trust companies should be the set 1, and that FICC capital requirements for members should be enhanced to be consistent with these increased regulatory requirements. So they actually did it. Wow. Okay, they're trying to push some people out of here. They further state that it believes the proposed capital requirements for banks better measures the capital available to bank members to absorb losses arising out of their clearance and settlement activities at FICC or otherwise, and would help FICC more effectively manage, and here's that word they like to use, mitigate the credit risks posed by its members. So what's happening right now? Interest rates are rising, right? They haven't risen to the extent they're rising now in a long time. There's things a lot of people are forgetting about, like the fact that RHO is a factor in options contracts, especially when you have these kind of rate hikes. Now, additionally, they are requiring U.S. banks and trust companies to be well capitalized, and they're doing this because it ensures that bank members are well capitalized while also allowing set 1 capital to be relative to either the risk-weighted assets or average total assets of the bank or trust company. FICC further states that expressly trying the definition of well capitalized to the FDIC's definition of well capitalized will ensure that the proposed requirement keeps pace with future changes to regulatory capital requirements. Here's foreign. This is foreign related. I'm not going to go into all this. It's 21 pages, but I would definitely recommend reading it. You can get some info on this, because this is pretty big stuff here. So as far as foreign broker-dealer, they must maintain capital of either 1.5, 5, or 7 times its otherwise applicable capital requirements. Okay? Oh, shit. Okay, hold on. So let me get this straight. So for foreign broker-dealers, FICC proposes to require a foreign netting member or foreign person clearing member who is a broker or dealer to maintain a minimum of 25 million in total equity capital. What? Hold on. So US side's got to have 100 to 500 million, and then foreign side's got to have 25. Huh. Well, there's your answer. That is hilarious, and it's specifically for foreign broker-dealer members. And they're also taking away the multiplier that was mentioned up here. So, let's go, Brandon. Given the accounting standards have converged over the years because we haven't been pushing a fucking narrative on foreign accounting issues, FICC no longer believes the multiplier is necessary, and its retirement would be a welcomed simplification for both FICC and its members. So, I mean, for fuck's sake, we have this so right, it's just a matter of time. And you don't have to hold options. If you're holding options, you're losing money if the stock's not going the direction you want. If you're not jacked when you're holding your options contract, you're losing money because that's how they work. You need to start getting the underlying in some of these very, very good plays, and then you can run different options, that's why they call it options, on those shares, like covered calls, cash secured puts, acquiring, or you want to sell some IV for income. I mean, you have very, very many possibilities. But if you're just going long calls all day, every day, it's a tough game because you've got to be right on the upside and you got to be right every time. So just keep that in mind. So this shit's pretty crazy. Again, more and more things that no one reads, because if you go and you look at this on the Fed Register, let's go to the filing real quick, see if we can find it. Really, we don't even have to use that one. We can just use any of these. This one here, this filing, 125 page views. This came out on the 9th. There's YouTube videos of people like doing random things no one cares about that get more views than this. But that's what I'm talking about. No one is looking. 125 people. Or, I mean, that's not even the case. It's 125 views. Could have been 3 different organizations looking at it each, 30 to 45 times for all we know. But again, that's nothing. Nothing. So again, it's not that the future's predictable or anything. It's this, we're looking in places no one else is. Like right here and at this stuff. And it's not just that one. It's all of these things. Federal Reserve System, 4 page views. 4. And this is on public inspection. Documents go on public inspection that are not publicly inspected. That right there seems to be a problem because no one cares. 1 page view. Was it me? You're welcome. But you get what I'm saying. This stuff is important to read. It is. And it's guided me the whole way. And I'm not going to stop because that's where reality is. Been there the whole time. This one has some views. What is this one? Comptroller of the Currency, Federal Reserve System, and the FDIC. So it's a 3-way. Very cool. Involves 4 different chapters of Title 12, 4 different parts. But again, that's still nothing. 2K views? Okay. The only people that are reading it are the ones that know what this shit means. So that's the problem. We won't ever be able to compete with these people until you play their game and read their material. This is the Trojan horse into the Matrix is this shit. Left and right all day long. Just saying. Anyways, spiel over. Take it easy.